How Singapore turned a swamp into a financial hub. In 1965, Singapore was kicked out of Malaysia. Not by choice, by force. The Prime Minister cried on national television. The island had no natural resources, no military, a population of 2 million people crammed into a space smaller than New York City, and neighbors who openly considered it a tumor that needed removing. Today, Singapore has more millionaires per capita than Switzerland. Its sovereign wealth fund controls over $1 trillion, and the average Singaporean is statistically wealthier than the average American. So what happened between crying on TV and becoming one of the richest places on earth? The story starts with a man named Lee Kuan Yew, who understood something most leaders don't. Geography isn't destiny. Policy is. When Singapore became independent, it had exactly one advantage: location. It sat at the crossroads of global shipping routes, right where the Indian Ocean meets the South China Sea. But Malaysia controlled the water supply, Indonesia was hostile, and the British, who'd been running things for 100 years, were packing up and leaving. Lee looked around and made a decision that seemed insane at the time. Singapore would become the most business-friendly place on the planet. Not just in Asia, everywhere. Here's what that actually meant. First, he made English the language of business and education. This wasn't popular. Singapore had Chinese, Malay, and Indian communities who each spoke different languages. But Lee knew that if you wanted Western capital, you needed to speak the language of Western capital. Second, zero tolerance for corruption. And this wasn't symbolic. Ministers were paid salaries that rivaled CEOs. The Corrupt Practices Investigation Bureau could audit anyone, including the Prime Minister's family. Getting caught meant prison and public humiliation. Within a decade, Singapore went from moderately corrupt to one of the cleanest governments in the world. Third, the tax system. Corporate tax capped at 17%. No capital gains tax, no inheritance tax. Territorial tax system, meaning if you made money outside Singapore, you didn't pay tax on it when you brought it back. But here's the part most people miss. Singapore didn't just lower taxes and hope rich people showed up. It built infrastructure that made doing business genuinely easier. Want to start a company? It takes less than a day. Want to enforce a contract? The courts are fast, predictable, and not corrupt. Want stable currency? The Singapore dollar is managed by technocrats, not politicians. Want your supply chain to work? The port operates 24 hours a day and can unload a container ship faster than almost anywhere else on Earth. By the 1980s, Singapore wasn't just attracting manufacturing, it was attracting finance. The government created the Monetary Authority of Singapore and gave it one job: turn Singapore into Asia's financial center, not Hong Kong. Singapore. They started with oil trading. In the 70s, oil markets were dominated by London and New York, but Singapore was closer to the Middle East and Asia, where most of the oil was being produced and consumed. So they built infrastructure for oil traders, storage facilities, futures markets, legal frameworks. Then they did the same thing for foreign exchange, then derivatives, then private banking. Here's where it gets interesting. Switzerland had been the world's private banking capital for decades. Rich people parked money there because Swiss banks didn't ask questions and Swiss law protected secrecy. But after 9/11, the U.S. started pressuring Switzerland to crack down on money laundering and tax evasion. Singapore saw an opening. It offered the same privacy, the same stability, but with better time zone access to Asian wealth, and Asia was getting very, very wealthy. China's economy was exploding, India was liberalizing, Indonesians, Thais, Malaysians, all generating fortunes and looking for somewhere safe to put them. By 2010, Singapore was managing more wealth than Switzerland in certain categories. It had become the place where Asia's richest families stash their money. But there's a darker side to this story that doesn't make it into the tourism brochures. Singapore's success depends on control. The government that eliminated corruption also eliminated political opposition. The People's Action Party has won every election since independence, not because there aren't other parties, because those parties rarely win seats, and when they do, it's news. Press freedom is limited. Protests require permits that are seldom granted. Activists have been sued into bankruptcy. The government's argument is simple. Stability attracts capital. Chaos repels it. Then Singapore can't afford chaos. Then there's the inequality. Yes, the average Singaporean is wealthy, but averages hide everything. The top 20% in Singapore live like kings. The bottom 20% clean their toilets. Migrant workers, mostly from Bangladesh and India, build the skyscrapers and live in dormitories that became COVID hotspots. Housing is technically affordable because the government builds most of it. But affordable means spending 30 years paying off a mortgage for an apartment the size of a hotel room. And if you're not born in Singapore, good luck. Foreigners pay double. There's also the inconvenient truth that Singapore's rise coincided with other people's money looking for somewhere to hide. When Indonesia's elites wanted to move money out of a corrupt system, Singapore was there. When Malaysian politicians siphoned off state funds, some of it ended up in Singaporean banks. When Chinese billionaires wanted to get around capital controls, Singapore offered solutions. The government denies being a tax haven and has signed international agreements to share financial information. But the line between competitive tax policy and helping rich people avoid taxes elsewhere is blurry. And now, Singapore faces a problem it's never had to deal with before. China is rising, but it's also increasingly authoritarian. Hong Kong, once Singapore's main rival, is no longer an open city. Western companies are moving operations out of China entirely, and Singapore is a natural landing spot. But that also means Singapore is stuck between two superpowers who might force it to choose sides. Meanwhile, the formula that worked for 50 years, low taxes, rule of law, political stability, is being copied. Dubai is doing it. Rwanda is trying. Vietnam is attracting manufacturing that used to go to Singapore. The island that built itself on being indispensable is discovering that geography still matters. And when you're a city-state with no resources, no military, and enemies on all sides, being indispensable is the only thing keeping you alive. So here's the question nobody wants to ask out loud. What happens when the world doesn't need Singapore anymore?